All right, like I said, when you plan these things, everything that could possibly go wrong usually does. So sorry for that little break. But we are really excited now to bring to you the next generation of broker-dealers. It's my honor to introduce Vince Molinari, who's a good friend, one of the pioneers in the space, and has been doing a lot of really, really exciting things within the industry. He really has been back and forth, to and from DC, really instrumental in giving testimony to Congress, and Vince brings with him also himself an extensive Wall Street career, and he's going to moderate today's panel, talk a little bit about that, and introduce the rest of the fellow panelists.
Thank you, Dara. Good morning. And again, thank you, Dara. And it's really amazing coming to the event today at FinFair, being with Dara at the first historic Reed Smith event. And really, Dara, kudos to you, because when you look at the composition of this room today of attendees versus what we had back at Reed Smith, you've pulled everybody together, and that's really amazing. And I think just as kind of a short segue into this from someone who's been on the Wall Street side for 25 years, kind of in that mid-stage, not quite the older statesman group yet, but what a wonderful panel earlier to have the wisdom and the insight of the people who really created the opportunity for the capital markets on the small cap side. So beautiful segue into our panel today of the next generation of broker-dealers. So I think what we'll probably start off, the easiest thing is to have everybody introduce themselves, talk a little bit about their company, the technology integration within your company, your strategy, and we'll kick it off with Blaine.
Well, good morning. Thanks for having us here. Thanks, Vince, for taking care of the panel. Mr. Malik came by and said I should start with a joke about the previous panel, but no, they were far too good to do that. The piece that I took away from that, though, which is I think part of why we all wanted to be here, is to build the relationships. Now that we are such interconnected technology-wise, it's sometimes easy to forget that Matt lives down the street in Richmond, and he's a real person, and we're not just competing on technology. So I work for a company called Folio Investing. Folio Institutional is the division that I work with, and for the most part, we're not a private securities company. We're not a crowdfunding company. We're a clearing broker-dealer, and we serve primarily registered investment advisory firms, some 500 plus such firms. What that enables is for us to use that clearing brokerage infrastructure and the staff to do stuff for online and private securities and quote crowdfunding. I'll call it 506B or C or Reg A, not Title III, obviously, that we think is necessary and revolutionary. So we think that everybody has figured out over the last 50 years that the way to do a broker-dealer structure is to have an introducing broker and a clearing broker, and the clearing broker does the custody and all the plumbing and the money movement and things like that. And the private securities business can make that same leap, but in, call it a year or two instead of 50 years. And so there are a few firms out there like Bank that are already using the Folio clearing platform for their public and private security issuance and secondary transactions. And hopefully more firms, either that I've already met or that I might meet here today, would like to do the same, so that they can create an integrated infrastructure that enables a very large number of relatively small investments in a very large number of companies, so that people can build diversified portfolios that include private securities, whether it be debt or equity, whether it be convertibles, whether it be under a 506 or a Reg A. To us, they're all just securities, so we support all of them, and they all help with a diversified portfolio that gives a good risk-return ratio that meets a client's needs, that is suitable, as you heard earlier. So that's kind of what we're up to, is on the back-end support. But in addition to that, and this is a bit more far-reaching in terms of vision, and Matt, I think, might say some of the same thing, we want to create more of a centralized infrastructure where, as an investor, whether an individual investor, an investment advisor, or a broker working for a firm, supporting their clients, you can find all of the offerings, or at least darn near close to all the offerings that are available in the marketplace, without having to sort of go from one site to the next, or one account here and one account there. So Folio Institutional is committed to the private security space. We've built out our platform over the last 2.5 years and made it available to other firms through a relatively new set of REST API endpoints, and I look forward to talking with everybody here. Thank you.
Great, Blaine, thank you. Matt?
Yes, thank you, Vince. Thank you, Dara, for putting on the event as well, too. Yeah, so at WealthForge, I'm one of the co-founders and president, and at WealthForge we provide a simple and compliant online platform for for processing private placement transactions, making private investing more transparent and efficient. So we are that back-end technology and brokerage infrastructure that a lot of issuers and intermediaries utilize today to do their online private capital raises. So we work with many of the leading portals out there in the real estate space, in the private company space, and in the energy space. And we're aggregating a lot of these deals. We've reviewed over $1.2 billion of transactions that are all wanting to be raised online. We currently have 600 million of those transactions to be invested on our platform. And we're agnostic, right? So we are not a marketplace ourselves. We just provide the technology and often white label the platform for our clients and our partners. We offer an invest button product, which is a place where you can set up an issuance, whether it's a 506C or a 506B and even Reg A in some cases. An investor can use that button to basically check out their entire process of an investment. And we handle all of the diligencing of the deal, the books and records, AML, OFAC, KYC, FinCEN, and supervision of the registered reps selling the transaction. And then we do offer a full API integration. So we work with several other broker-dealers, and we provide them our technology that basically handles the setup of the offering and the issuance, and then the closing of the transaction through escrow, not currently through custody. That's one of the things that we're looking at the marketplace to evolve into and doing through Blaine's firm and some other innovators in the marketplace. So we're seeing a lot of growth. We're starting to see large funds and large sponsors come into this space. We listed a $150 million fund a couple weeks ago, and we're seeing bigger and bigger transactions come online. Our average transaction that we've closed is about $3 million, but the current largest transaction on our platform listed, as I said, is $150 million, with our average being about $8 million. So we're seeing more and more deal flow come online, quality deal flow from larger institutions, and we're excited to see where the space goes and lead this space over the next 6 months, a year, 3 years.
Thanks. Mark?
Thanks, Vince. Thanks, Dara, wherever you went. I'm a little different than these two here. I'm actually the front end. And I'm also a banker that looks at things more so as how is this going to translate into the actual marketplace? Because the reality is what we've seen over the last couple of years is 506B and 506C, or specifically 506C, really doesn't work. If you note, a lot of these companies are really focusing on real estate projects where we are seeing some success. But what I did is where 45 companies applied to FINRA, 44 of them were doing private placements. We're doing public equity. So my company, we're TriPoint Global Equities. We're an institutional investment bank that has recognized that there's an inequality and there's not access to transparency and access to information for the regular investor. So we created an online bank called Bank. And what Bank does is it takes institutional product and it levels the playing field. It takes that type of structure and now offers it to accredited and non-accredited retail. But we're doing public equity. So we're doing IPOs, secondaries, follow-ons, registered deals. We also do pipes. We can do private placements. And through Folio, we've been able to create a completely digital solution where you can come on. We offer 99-cent trading, so you can buy and sell Apple and Microsoft. And basically, that's a marketing tool to get you into our site. And then you get access to these underwritten transactions. So not only TriPoint deals, but we also offer, our sandbox is open to all other broker-dealers that we welcome either as a selling group, a co-placement, or a syndicate manager or syndicate group will come in and you'll be able to get access to that deal flow. So for instance, Facebook was an example where everybody could have Facebook because what happened, every institution was selling it. But if you look at GoPro, nobody got access to it, at least no one in the retail world, because the institutions all took it. What we try to do now is level that and we allow that distribution to go out. We've also built a completely seamless transaction where you can come in, open the account, as I said, trade for 99 cents, and you can subscribe to the offering. You can get access to everything that you need, transparency, you get access to the data room, and then when you check out and you fund your account, those securities are in your account immediately. So there's no delay, and I don't know how many people know there's a rule called 0905, which is a very important rule because that's a rule related to FINRA. And the easiest way to explain it is if you tried to go and take your stock certificate down to Schwab or E-Trade, or even your existing broker-dealer, they're not going to take it. And that's because of the liability shifted back in 2009, where broker-dealers and clearing firms now are being held responsible for identifying fraud, which we've always been held out to do, but now if we miss it, we're going to be held liable for it. And there was an SEC action that you can see just a couple of days ago where Oppenheimer actually paid a very significant fine for that. So what we've been able to do is build that all internally, and that's key because if an investor does a Reg A deal, they're going to be able to get their deal placed, but the investor won't be able to actually sell those securities. And we offer that complete solution and list those securities onto the OTC market. So we provide secondary trading, we provide liquidity, and the final thing that we do is that we provide an interactive experience. So when we're doing an IPO, and most banks here that are participating in IPOs, you're used to seeing a prospectus, it's black and white, it's boring, it's going to tell you every reason why you're going to lose your money, which is key, but you also need to have a visual experience. So we have videos, we have interactive roadshows, we have management discussions. We take the investor in Iowa and now let them to go down virtually to the facility in Florida and be able to see all aspects of what's going on. So it really, as I said, levels the playing field and provides transparency.
That's great. Will?
Thanks. My name is Will Febo. I'm the CEO of Digital Capital Network, which is a wholly owned subsidiary of Merriman Capital. I entered Merriman Capital about 3 years ago as an entrepreneur, diving into the capital market space. But Merriman Capital has been around for 12 years. It's a public entity. It's raised over $1 billion for emerging smaller cap companies. It trades, it advises, and it banks. I signed up. I had to take a test. I had to go, get licensed, which was an interesting experience. If you haven't done it, good luck if you have to, if you're not from the space. But what I learned was, just coming in with fresh eyes, was basically the system was broken. There was a lot of me, my account, what Humbert was talking about, the relationship process I thought was flawed. CRM was weak. And as an entrepreneur, of course, I was watching all the techies build crowdfunding sites. And as I was learning about regulation and meeting with people on this panel and the ones that just spoke, there was an unbelievable opportunity. It's going to take a long time, but just to bring more efficiency, more compliance, more awareness to and level the playing field. So Merriman Capital launched Digital Capital Network about 1.5 years ago. We basically bought a technology and re-engineered it to basically process the most complicated PIPE/IPO type transaction through to the simplest, being real estate or raising AUM. We were about 30 people. We have offices in San Francisco, New York, and Boston. And we're a digital fintech within a traditional broker-dealer, which has its good side and its bad side. We're also public, so the public world still thinks of us as a BD, which people don't value very highly today. But we're sitting on what I think is an unbelievable valuable asset. And I think based on what you're seeing in what you'll hear today, what's happening in terms of real test cases of people who have built platforms, is you've got a lot of users who have been trained to use technology to get up to speed in a quiet way. They don't want to be hit on right away to look at an investment. But at the end of the day, it's still a digital meets analog solution. You still need to sell. And I think that's where, the theme of relationships, I think, should be steady through this conference, because you can't overlook the selling process in selling a security. As a salesperson in multiple industries, you got to sell. And so I think one of the challenges we all have is the technology we understand, it works. I think bank has an unbelievable, elegant solution, having gone through it. But at the end of the day, someone's going to call someone. And you need to articulate a fairly complicated sale, even though they can get up to speed easier, better on their iPad, on their iPhone, on the beach. And that's a challenge. Finding the check writers is a challenge. And it is for us. Now, I'm lucky in that I'm within a business that has revenue. It has trading, it has banking and advisory. So we didn't have to raise money to launch the platform, but we'll certainly have some strategic questions, in the near term as things start to close and come together, whether we become a fintech company or a fin company. That's where we are today.
Will, if you want to start on that side and talk about whether that's debt, equity, the type of offerings that they may be structured as.
Sure. There's a couple interesting ones. One which I went after for largely for marketing attention, but we have the Boone Pickens Mutual Fund on our platform right now. Boone Pickens, everyone knows that name. I met with there's sort of a next generation of PMs that are launching a couple new funds, and yes, even they have to sell and raise AUM. And I went to them and said, look, I have 300 family offices that I don't know terribly well, to be completely honest. I mean, they've opted in to be part of our community, but we're getting to know them. They've all said they like the space, they want to diversify in energy, so we'd like to have a success-based relationship, and we did our due diligence. Obviously, they were very tight, and we listed them. And there's a lot of risk to that relationship the way it's set up now, because someone could log on, look at it, and then just go buy the mutual fund. We really would never know. But what we found was, brand value went up, the legitimacy went up, and I was getting calls from family offices that didn't want to register, but they definitely wanted to learn about Boone Pickens. So it was an interesting way to use a very established name that you didn't have to worry about from a due diligence standpoint, very solid offering, response issuer. And it brought us a community that we never would have known. Boone Pickens would never go to Merriman Capital to help them raise money for a mutual fund. We're not on that list. But now we are through DCN. So I think that's just a creative way to use offerings that are out there, which don't cost you much to do, to get awareness. And then I think the latest one that's about to close is we've recently launched a real estate section, which is definitely more mature than the private placement in terms of the market. And that was one that had institutional, about 90% institutional came to the table, and we're finding through us, and then the 10% we're reaching out to the individuals, the high net worth. And we have a particular community of physicians just because of some partnerships we have, and they all look at it and like it. So it's an interesting combination, real estate, mutual fund, when Merriman Capital is known for private placements and pipes, basically. So those are two examples.
Mark, do you have any examples you want to put forth?
So as I said, we primarily focus on the public equity side, which is unique and a little different than doing the 506Cs or the Bs or the private placements, because we're able to market to non-accredited investors, whereby on a private placement, you need to deal with an accredited investor who, as Will said, needs a hand-holding and needs to be explained the transaction. So we're focusing on an area where we're not going after large orders, but we're going after mass. And people don't wake up in the morning and say they're going to buy stock. You still have to sell it to them. And we try to sell it to them based on value. And by having the liquidity and being able to list on either the NYSE or NASDAQ. And most of the transactions that we're doing are underwritten transactions directly onto the NASDAQ. We currently have an offering that is up now that's going to close on August 11th. It's going to be a NASDAQ-listed security. We have another one that's being filed today that will be out in early September. We're at the end of the comment period. And then we have a follow-on, another offering that will probably be out at the end of the year. Our offerings range anywhere from 10 million to 45 million, and in that general range. But what we've been able to, again, the truth to this is that this is a new area, and people are not used to being solicited over the internet and being solicited by receiving emails or content that might come out through blogs or something like that. So we still have to, what we call cheat, where we are placing these 90% institutionally, and then we're bringing in the retail to complement it out. And that's really key, because it's easy to go out, and Merriman probably can attest to this, where you have 5 or 10 institutions that are going to take down the entire project. But that's not going to get you on the NASDAQ. You need to have 400 round lot shareholders. So that's one of the things that Bank's able to offer. And we've been able to now convince a lot of our competitors that we're not competition, but we're actually a complement. So we now have larger banks that are coming to us that are doing institutional placement that might raise $200 or $300 million, but they don't have enough shareholders in order to qualify. So we're able to bring those shareholders in. And going back to what that really means to an individual investor is these are offerings that individuals would never have access to, and now they can have a piece of it.
Great, thanks. Matt, this one's for you. I'll have to read this one. It's a little bit long. Many online finance platforms use technology-enabled turnkey solutions to outsource their back-office tasks in order to facilitate private security transactions. Can you give us some insight into the kind of platforms that you work with and the kinds of transactions that you facilitate?
Yeah, sure. So we work with
first and foremost, a lot of real estate sponsors and a lot of real estate intermediaries and a lot of real estate portals. Of the $1.2 billion that we've diligenced, about half of that has been from real estate portal sponsors or intermediaries. That can be anywhere from commercial to residential. It could be hotel complexes, apartment complexes, shopping centers, storage facilities, skyscrapers, can run the gamut there. One of our clients did a public 506C for a Hard Rock hotel. And then we do, a good portion of our other business is in energy, energy funds, coal, oil, energy, natural gas, even some land lease opportunities in the energy space. And then another portion of our business is in pre-IPO companies, so secondaries of DocuSign and Palantir and some of the larger companies that have yet to go public. Some of the portals we work with here in town would be Equity Zen and Ingress Capital, two groups that are leading out of the New York City area. And really we work with some other larger issuers, so direct issuers in real estate and in energy and in traditional larger private companies that want to raise $2 to $10 million of their capital stack online. The majority of it has been equity, probably 2/3 has been equity, and then the other third's been in convertible securities. And we're seeing these deals get closed and filled within 40 days. So our average transaction takes 39.5 days to close. So when things get listed, they do get subscribed to, and some of that is through phone calls from registered reps working to sell the deal, but some of that is bought too. Several of our portal platform partners put up an allocation that may be a couple $100,000 or a few million, and it gets subscribed to very, very quickly, and it's bought for the first time by investors and not just sold. And that's what an online platform and shelf space offers, and that's what our technology facilitates, is the real-time purchase of those securities and us handling all the paperwork and compliance initiatives on the back end.
Terrific, thank you. Blaine, this one is for you. So, given the advent of alternative assets, both on the primary issuance and the secondary trading, or the beginnings of secondary trading, we're lacking clearance, settlement, depository processes as exist in our public markets. How are your folio addressing this so investors can hold a record and be able to transact, clear and settle?
Sure. Thanks for giving me the easy question. So as an example of one that's already in place would be bank, and one that could be in place in the future would be folio supporting a company like WealthForge, where the process used to be long ago, not that long ago, call it 2 years ago, you got your paper stack, you signed all over the place, you wrote a check, it went off to some bank in an escrow, and you got a different piece of paper back. Now a number of firms up here and elsewhere in the room and elsewhere across the country have taken the first part of that process to be online. So now you can see the offerings online, you can do the squiggles on the virtual paper online. For the most part, you still get a piece of paper back, and ClearTrust is here to help make that somewhat more book entry. But if you combine all the pieces along with the clearing broker, you can own that security in your online brokerage account. And once it's in the online brokerage account, supported by the transfer agent, supported by the issuer, and supported by a front end out supporting the customers themselves, now you have absolutely no question about, is the security valid, how long has it been held, is the person who they say they are, and questions about the typical process of needing a legal opinion to sell your paper certificate pretty much go away. So the process then of secondary transactions becomes much, much easier on the front end. And the process on the back end for us as a clearing firm is so amazingly simple, I can describe it in about 5 seconds. We take the cash out of one account, put it in the other. We take the security out of one account, put it in the other. That is secondary transaction processing at its core. And you might say, but wait, when you do IBM, don't you do continuous net settlement with DTCC? And well, yes, but in private securities, there is no DTCC. So that's a role that we're playing, is being the central processing books and records for all of the securities that are on a platform. Obviously, at some point, some other clearing broker will come into this space. We're a Java shop. Our technology sort of max age is 12 years, 15 years. So for a mainframe, NFS or somebody like that to come in and revamp what they do to do what we now do, they have to see 2 things: proof that it works and money in the environment. And so far, there's not a lot of proof that it works. We can do it, but it's not the gold standard of everybody doing it at once. And obviously there's not much money in this space yet. So For now, Folio is the only, and I make this more of a question than a statement, the only clearing broker in the U.S. that will do book entry street name securities, both initial issuance and secondary transactions, in the same online brokerage account that you do your public securities. Why that's important, or at least one aspect of why it's important, it gets back to where the money is and who you're selling to. At the moment, it seems like most of us are chasing this relatively small cadre of self-directed individual investors who will do things on their own online. And there is money there, no question about that. But most of the money is in advised accounts, either under a broker or under a registered investment advisor. And half of that money is in individual retirement accounts, IRAs. And so for the most part, most of the money is not available for private securities right now. And that's what we want to change by using this infrastructure that everybody knows and loves called your online brokerage account. You can have an IRA that holds private securities that doesn't cost anything extra. You can have RIAs hold these private securities in their client accounts and not balk that the money ran off and disappeared somewhere that's not visible in their statement that they can't get paid for anymore. You can have registered reps under broker-dealers now buying these securities in their clients' accounts in a seamless way, so that you, as an issuer, now you have access to capital that at the moment really isn't accessible, which is most of the capital in the U.S. under advisors and IRAs. So that's a few thoughts.
Perfect, thanks. Dara, I know we got a little bit of a late start, just managing the end. Great, I'm trying to think of a couple out of here. I think, again, one of the other challenges in emerging practices and new assets is investor protection, suitability requirements that we talked about, and the ability, at the end of the day, the security still has to be sold in some process. So this is open to the panel in general. Is there typical listing criteria for the platform on deals that are putting forth that you think may help to achieve that result of investor protection, standardization, and continuity of information on the platform?
I'll take a first swing. We're all probably a little different there, but because I apply sort of a broker-dealer perspective, and we're trying to be more institutionally focused versus truly leveling the playing field, because we just don't have that infrastructure yet. So we basically say, you know, it's got to be a $4 million or greater raise. There's got to be some raised, either inside the board or the CEO. They have to have some skin in the game. We find where we are in the micro nano cap space, that makes a huge difference. And then a seasoned management team, because we do full background checks on the people, and if they're seasoned, they don't blink an eye at that. If they're not, we also charge a fee just to participate with it. It's not a retainer, it's a one-time fee to list. That also screens out a lot of companies that really basically just haven't been able to raise money, but they're looking for people to.
Can you quantify that amount?
Sure, yeah, we charge, I mean, it's between $5,000 and $10,000, basically.
So is that one of your first filters?
It's part of the agreement, and it's talked about up front. That doesn't guarantee you, you know, you have a banker on call or any of that. It's really literally a listing fee. It covers the background check. That's not how we're going to make money, but it definitely gets rid of maybe 75% of the people that call. And then we obviously have a success fee. Ours is 8%. It's pretty well known. Best efforts, non-exclusive. And then we go through full commitment committee. I'm on the commitment committee as part of the bank and DCN, and we have, you know, all like Needham was talking about, you have all the disciplines represented. So we treat it just like we're going to take it on full service, because that's what FINRA requires, and you're better off having that system. And then it goes into both a social and a direct sales approach. So we have about 800 opt-in people who want to see everything we do there. They've said that. We know their preferences, so they'll see what they said they want to see. And then we have several thousand outside of that. We recently acquired a company which brought a very large group of accredited investors who were participating in basically allocating money to funds. And we're about to reach out to them in a pretty extensive way. So it goes, and then it's about who clicked on what and calling them.
Mark, you want to add to any of that?
Yeah, I mean, because you turned it up. A lot of people don't realize that when you're doing these securities transactions, you have to fall under FINRA, and you are under FINRA. And there are certain requirements that we have to do. We treat every single offering as if it's a public offering or a private offering. We have diligence requirements and it's quite intense. It's not just going and getting one background check or just getting the business planning and forwarding it on. We have to actually do full diligence, and we're going to be held responsible. We have what's called 5123 filings with FINRA, and every offering, whether it's a private securities transaction, whether it's a public offering, must be filed. And we also have comp issues. So if you're doing a public offering, you have to deal with FINRA comp, and you have to go through that whole procedure, and it's a negotiation, and it's kind of this black box that you go into to try to figure out how much you can get paid and how much they're going to let you take. And then on private placements, you're able to go in and command a little bit of a higher fee. But one of the interesting things that have come up is Reg A Plus. And a lot of people don't understand what Reg A Plus is. And I've met with a lot of attorneys that are very excited about it. They all talk about it. They're out there promoting it. But the reality is they can't execute these transactions, and they don't recognize that a broker-dealer needs to come in to be actually able to facilitate that transaction. And then when the broker-dealer comes in, Reg A Plus is being treated like any other public offering, where we have 5123, we have diligence, and then we have comp issues. So we did in talking about the type of companies that we take on, we did a seminar, a webinar with the OTC marketplace. I had 163 companies apply to come onto bank to do Reg A offerings. 95% of those companies should not be public companies. They're very early stage. It's going to cost them more in compliance and audit fees and legal fees than they're ever going to make. And it opened the doors to Pandora's box, where you have all these types of companies that think suddenly now they can go out and do a small cap IPO. So the type of companies that we look at are companies that are going to actually provide a return of investment to our investors. Because the other thing, that other side of this, is we're all talking about what the issuers are, but let's talk about what the investors are. We have, as FINRA members, not only investment objectives, but we also have suitability standards. So we've been able to build in the filters to be able to filter out. So I'm going to give you the example of an accredited investor who's a plumber who tripped and fell. He's accredited because he got a $2 million settlement, but he's certainly not suitable to be buying these types of investments. And my concern with Reg A and my concern with all the general solicitation is grandma's at the bingo parlor, and she hears that this next investment is going to be Twitter, and she thinks she can retire from that and puts her life savings. So we have to still be that gatekeeper and be able to have to say no. And it's hard for an issuer, and it's also hard for my salespeople. And luckily in this circumstance, my salespeople is the internet. So at least I have the ability to say no. But we have to review that. And so the types of deals that we're looking for are sustainable companies that they could be early stage, and they could be on the cusp of something, and the capital that we're going to raise them will get them to the next level. But we're not raising capital to keep the lights on.
Great, thank you. Time for one more? Yeah, and I actually think this is a good one to close on.
Okay. I think, open everybody on the panel, when you look at the broker-dealer landscape going forward, how do you think it's going to change? Do you see this as a centralized location like NASDAQ or New York Stock Exchange, or do you see each broker-dealer becoming a mini exchange itself? Anybody want to grab that?
Well, we can all work together. There's zero threat to our business models, putting a cross-selling agreement in place and sharing deals. And that tells me that there's going to be a very collaborative approach. The industry is not built that way. Behavior is not built that way. You'd think it'd be obvious, but it's not. It's coming from the outside. It's amazing. It doesn't happen. More deals would close, higher quality companies would grow. So I would say it's not a consolidation. I think there's plenty of room for entrepreneurs and people who love their business and want to have their own brand, but can collaborate, but they have to want to collaborate. And there aren't that many that know how to collaborate, in my opinion.
I agree completely. Greed is good, and all these other banks, they think they don't realize, everybody pretends that they have a better relationship with the institution because they had a drink or got the card at the last event, and that they're entitled to that fee. If they just recognize that this isn't the go-go days of 5 years ago where we would make a phone call and get a $20 million ticket. Now you have to make 100 phone calls and you get $5 million. So it'd be easier certainly to partner.
Yeah, I think two things. One, just from demographics and the way that business is moving. Broker dealers and these platforms have to have really robust technology, right? I personally don't know how to call a stockbroker. I'm going to log into TD Ameritrade or Schwab or E-Trade and purchase some securities, right? They'll do that for privates. That's what's happening. That's what we're all working on and working toward. And then secondly, the market is so big, right? So, real estate, I think, saw some figures on 43 trillion or some enormous amount of assets of real estate in the United States. Private securities every year is about 1.7 trillion if you include secondaries we're just scratching the surface, not even 0.001% of that yet. That product is online. So we're all moving it that way. So right now there's so much opportunity for so many players, and that's why there's 4,200 broker-dealers, there's a couple thousand portals. Of those 4,200 broker-dealers, probably 1,000 maybe do privates. So it's very disparate and not aggregated yet because we're all working to build product and we can all originate very effectively. Do I think it benefits people and investors in the marketplace to be aggregated at some point? Yeah, absolutely. I think it'll happen through consolidation first and then aggregation later. But yeah, I mean, a robust exchange, a venture exchange, I think it'll be talked about in later panels, could be beneficial. I just think it's a little ways off.
Blake?
I think for the investor perspective, you want some centralization just to bring enough buyers and sellers together in the same place at the same time to have any chance at something you might call liquidity, whether that's through multiple different firms that have some back-end integration, or somewhat self-interested, I might say, one firm that provides a common back-end for all of them. We'll have to see how it plays out. But I think the right answer for the investors is to put as much product and as many people in the same virtual space at once. Otherwise, the buyers and sellers won't find each other. So I think it's important. Thank you.
Awesome panel. Thank you so much, everybody.